The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another gorgeous and beautiful day in Clearwater, Florida, or from Clearwater, Florida. It's Thursday, August 2nd, another gorgeous day at the headquarters for technical trading and investing, TFNN.com. It's Brahm Pie Day. Ooh, piece of pie. Anyway, this is National Brahm Pie Day. This is a place famous for pies in the 30s and 40s when people were coming back from their lake homes up in Minnesota. They would take the shortcut to Duluth through Brahm and have a nice piece of pie at the Park Cafe. It became quite famous and has kept its famousness over all the years. And now, of course, every time this year they have a giant pie festival and pie eating contests, and pretty much where the food eating contest actually started. But a little town called Brahm that has wonderful little pies, apple pies, cherry pies. Woo! Very, very good. Anyway, we're going to get to the market, which is already in progress. Probably the worst kept secret in the market was that our wonderful friends at the ECB would do nothing as usual. I'd been banking on it and was heavily short, actually added short positions in the newsletter today. Might add another one here before the end of the day, depending on how things work. Got some bounces out of some stocks that are in some sectors that should come down, and probably the worst part is trying to find some stock that is weak that hadn't already been pounded. You've got probably 20% of the stocks taking off, about 30% doing nothing, and the other 50% getting punished on bad earnings over the last couple of weeks. Another chapter today in Algo's Gone Wild. It looks like night trading. Basically, he's going to have a $450 million loss. Saw somebody post in the den. The speculation already is that they will not have enough money, even though the CEO did come out on Bloomberg today and say he had enough money for continuing operations and to be under the auspices of the New York Stock Exchange a viable entity. But looks like they may have continuing problems as a lot of people shy away from using their product. It's unclear whether they have the ability to get $440 million in the next 3 days to make their margin requirement calls. And, of course, one of the question is whether or not they're going to have an instant or a very quick buyout and someone step in. They've been around for a while. They were some of the worst. If I remember right, this is the same company that was involved hugely in the front-running of stocks in the late 90s and in the early 2000s. So, have they always been great people? I'm going to have to go look this back up because I just remember a bunch of horrible things that they were accused of and probably paid pennies on the dollar to get to go away. But night trading, been around for a long time. It looks like unless they get probably a couple $100 million fairly quickly, probably the New York Stock Exchange probably going to, and NASDAQ will probably cut them out of their trading activities. The CEO was on Bloomberg about 11 o'clock today, something like that. He said, unfortunately, the software had a fairly large bug in it. It sent bad trades to the New York Stock Exchange. The desire to just make one simple change and not test it is rather huge. That anybody at night would approve that probably means that someone called up and said, hey, I want this change now. They told them it would take a day. Someone called somebody else and said it better be in there. They got the changes done. Of course, no time to check them, and whatever happens, everything blows up. This is the exact same scenario we saw in Facebook. their IPO, the exact same thing. They needed to make some changes last minute, not enough time to change them. They knew that there were problems. In fact, probably the biggest problem Knight has is that even though that they kind of suspected something was horribly wrong, they didn't know what and didn't turn the machines off. They could have turned them off fairly early, but it didn't take a long time before the other machines instantly saw an opportunity and raided them. So overnight, 440, actually over about 45 minutes, $440 million is gone. That's just what they're claiming now. The losses could be much higher than that, but it's going to be tough to figure out. The sharks are already kind of circling Knight. Imagine that if you were some big firm and you wanted to get a hold of Knight, you could probably withhold your business for a few days, make things even tougher, get a little better price. But that's kind of the tendency when the sharks start circling you and smell the weakness. They tend to, just Wall Street Journal will tend to make it rougher on you. It's almost kind of like the kid that fell down in the sand. All his buddies are going to kick sand in his face until he gets up and kind of laugh at him. And that's pretty much what's going on here. But except a lot of people think, hey, maybe we can buy Knight on the cheap on this, but they're going to have to take a look at their books. Normally, none of these deals happen overnight. And probably the best thing for an acquirer would be for Knight to be pulled off and someone sneak in here and buy this on 10 cents on the dollar, which is a good possibility over the next few days. I would imagine that while the article somebody posted in the Den says that they were reaching out to another large firm, I would not be surprised to see somebody like BAT or another ECN out there step up and be able to pick them up for pennies on the dollar. Android versus Apple, we found out, and we talked about it on Tom's show on Friday night, that we were seeing 3-1 in the United States, Android versus Apple smartphones. We now have numbers worldwide, and 100 million of the 158 million smartphones shipped worldwide in the last 90 days were Android. So we pretty much have that same kind of 66% or close to 66% mark that we see here in the United States. And people that are buying them for the first time are overwhelmingly picking up Android phones over Apple's. Probably not a big deal because, of course, they're much cheaper. And, Android's basically in that last 90 days got 68.1% of the market. Pretty strong numbers for Android. Jim Chanos was having an interview. He's a big short seller. He recommended a book, and I'd seen this book years ago and kind of looked through it. Very interesting book. It just reminded me to bring it back up. The book is called The Match King. It's a story of a 20th century Swedish businessman who basically set up the way to run a giant con a la MF Global or any of these others where you're moving money around, more appropriately Madoff. In fact, Madoff was probably the Even Kruger story was probably the archetype for what Madoff actually did. This man was able to go 25 years with a bunch of cons revolved around literally having patent on matches and striking matches on the side of a box. He borrowed money from the U.S., loaned it out in Europe in exchange for match companies, and it was very confusing story, but basically he got everybody to believe these giant patents on matches were something, built it into a huge industry, and when the jig was up right after he actually got a couple of years into the Great Depression before everybody figured it out, and came to his room and found out he committed suicide, but had a great about 30-year or 25-year run with one of the largest cons in America. But it is the basis for all the ones today, and a great read. Now you can get it on Amazon for about $10. It's not a big expensive book, but if you ever wondered how all these cons actually work, it kind of goes into the deep recesses of the criminal mind, and why none of these stories are actually any new, from Madoff to all the other ones we see out there. Greed is still out there, and like Ivan Boesky said, greed is good. ARO has come out with numbers, getting rather hammered today. Let's see if I pull up a chart real quick for them. Probably the most interesting thing to me was the earnings call last night. They are the first that I've really seen that said that they were really taking earnings forecasts down because the cost of their goods is going up dramatically with the change in the dollar. And why they sell a lot of stuff, it's smaller margins, and they're expecting it to get rather smacked. So, down absolutely hugely. What was it? Off 33%. And I expect we see other companies in that same sector, even though some of them haven't come out already. I suspect we start seeing a lot of these companies that manufacture a lot of their products overseas in Malaysia, other places like Vietnam, that have to import the products like cotton in dollars, manufacture them, and then re-export them, and take a hit literally both ways on the higher cost of production and the higher cost to ship these goods back, like T-shirts. Aerospatiale, I think they're the same one that always has the guys in the jeans and no shirts on dancing around in the front when I go through the mall, but haven't paid a lot of attention to them. I actually picked one for the newsletter today, and I think we got a good fill on it. We're going to have to see how it turns out. But like a lot of these, people have been upping estimates and pushing them on the public, only to find out what really happens at the end of the day. Let me get back to my presentation. Full year earnings should be between $2.50 and $2.75, down from the previous forecast of $3.50 to $3.75, the company say. Analysts had expected earnings of $3.36 a share, so way off of what they're looking at. But the biggest thing is, when we're talking about King Dollar here at TFNN, they are the first to really start saying that they're seeing a big change now in the cost of the dollar and the products. And, of course, they had a few more things sitting on the shelf. Anyway, we'll be back in a minute. Looking at the markets, off about 18 points on the S&P 500. We'll continue watching here.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
One of the hottest products in Silicon Valley right now is called the Oculus Rift. It's designed by Palmer Luckey. It combines immersive stereoscopic 3D rendering and a massive field of view and ultra-low latency head tracking. I think even 10 years ago, everybody was wearing these things on their head, and the future was going to be immersive 3Ds. None of the products worked all that well. Apparently, everybody is going goo gaga in Silicon Valley over this new headset. Apparently, it's got about 30 times the speed of previous devices, a good price point. I'm suspecting that means under $500. But the one thing it does have is a field of view that is much more normal than sitting in a theater. It's got a 110-degree field of view. Most of the devices before were kind of about 40 degrees. Gave a real kind of horse blinders effect. You could just see what was exactly right in front of you. With almost 4 times with the current model, 4 times the viewing area. People say that this is really getting close to what they were expecting, and a lot of the big game guys out there in EA are all thinking this is finally going to be the product that pushes immersive 3D over the edge. But it's a company that's made called Oculus. But might be keeping an eye on it. May be one of these that goes public fairly soon and continues to drive this marketplace. But everybody that's seen the demo in the last few days is just going nuts and tweeting about it. I almost feel kind of dirty just saying tweeting. They are talking a lot about it. It is becoming quite the belle of the ball in social media, especially for the tech set. Keep an eye on that. They may be actually a huge seller to go along with things like Kinetic in the future with big volume. Anyway, factory orders missed today. Factory orders declined 0.5% in June, missing economic expectations for a moderate gain. The census data. What can you say? Of course, everybody was looking for a little higher. It wasn't bad enough to actually get the Fed get moving, so it continued to be an issue out there. Let me update volume numbers here, because volume has been good. We've got 2.6 billion shares at a little before 2:30 here today. Looks like we're going to have another 4 billion share day, or maybe even more, depending on how the end of the day comes in. But I continue to suspect we're going to have a continued and sustained move until we see some kind of intervention. And I suspect it will be intervention interday. I suspect that we have probably a couple of weeks, or 3 or 4 weeks maybe, before anything happens. One thing that happened, and that was once we got to pretty much the first or second week of June and nothing happened in Europe, I suspect that nothing will happen until September. The reason why is I've been over there enough, spent a lot of time in the 90s, and you can't get anything done between about the last week in May to the first day of September. Everybody's on holiday. No one wants to do anything. Even the people where you stay at the hotel don't want to do anything. Literally, everybody's on vacation. No one has their mind on doing any kind of work. And if you thought 35 hours a day and they start screaming was bad, wait until you get there in the summer, where they think 28 hours is more appropriate, especially if you get to France. Oh, we only work 25 hours in the summer. Oh. Anyway, always a treat to go over there, but for someone that was working at the time, I was doing consistent 70, 75-hour work weeks, and flew over a number of years, a little over 1.5 million miles. It just seemed to me like I was dealing with the laziest people in the world. And, I'm sure there were hardworking people over there. I just never found any of them. They were always headed on the way home. They were always headed on the way to the pub. And they always had at least 20 good excuses why nothing was ever done. So my experience is probably going to be highly biased by that, but I can't see us anything else changing until we get into either a calamity where we do see Spain drop off. Let's say they were down 5%, I think, at the close or more. They drop another 20%, maybe they'll actually get moving. But Merkel, she's on vacation. World could be going to hell, but those guys always are on vacation. Just always the same thing. Don't look for anything until a crisis. Then when that crisis hits, look for an early afternoon for a chance for them to come out and say something. But I think we're going to have to go down probably 100 points on the S&P before we get there. And it may only take a day or two when things get moving. We'll be back. Give me a call, 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
As we come back, we're looking at it, still seeing the market move along, but we're pretty much hanging out at these levels, off 17, 18 on the S&P. I expect that we probably sell into the close today if we don't see a nice bounce here in the next 10, 15 minutes. Looks like people are going to be selling into the close once again today. And let's see, just let me make sure that I've got the latest update here. For some reason, this machine in the studio doesn't want to update. Well, whatever, 1359 on the S&P. So we'll continue looking at it. 2.65 billion shares so far. Still looking at probably close to a 4.0 billion day on the New York Stock Exchange consolidated tape. On Friday show, tomorrow we're going to have in the last half of the hour Sam Savage. He's going to talk about the flaw of averages, how it applies to the stock market, but maybe a little bit more statistics for us traders out here and a little less witchcraft. Maybe I'll say it that. But probably the biggest thing is humans are pretty bad when it comes to either statistics or averages, and we're going to expand on that a little bit tomorrow with Sam L. Savage. Sounds more like the book should be some kind of adventure book, doesn't it? Sam Savage, Adventures in Averages. But no, it's pretty good. It's got some fairly good reviews on Amazon, but I've kind of read through it a bit and sent him some stuff. We're going to talk about maybe some things that apply to the market at some level, and his 7 deadly sins of averages when people go to look at him. So we'll be looking at that later in the show tomorrow. So hang on to that. What else do we have going on? Well, we were looking at that. I wanted to go through some ETFs today. I'm thinking about either having ETF Tuesday or Thursdays. Not exactly sure which one will work better, but might be we always go through these ETFs and look at them and see what they're saying. But we'll continue to think about that. Some of the ones that look like are setting up is the biotech holders. And the problem is, of course, not a lot of volume in some of these. The BBH has gone from about I don't know, 15, 18 stocks down to about 5 now. Not a whole lot of diversification anymore in BBH, just because every company continues to buy every other company until there's only a handful left. Probably not as big as it has before, but certainly making some signs that maybe it has topped out in this cycle if you're looking more at the chart pattern out here. What else do I want to know? Broker-dealers index, I think, is very interesting also. When we look at it, it has come back into this original gap up that has existed since the November 25th time frame. Had a nice little gap up and then kind of a pullback, kind of filled about half of that gap up in that November 25th jump. Came back, volume on these, again, fairly light. But what it is showing us is we are coming back into some of these. So when we look at these, of course, the first thing I want to do is go back and look at Goldman Sachs. Chart's not all that different other than it's had a little bit of bounce to it. Basically, we're back in that same level. This was December 19th on Goldman Sachs, but you had that November 23rd low. So they're kind of all back in there. But on a greater scale, a lot of these broker-dealers look like they want to come back in there and hit this gap one more time. On Goldman Sachs, that'd be around 90 bucks. Let's go to our next ETF, and that's the Biotech Index Fund. Again, maybe just a little bit more volume in this particular one. IBB is the symbol on it. Let's look just a little closer. But what we've had here is a high volume high, so we might have one more opportunity, but it looks more to me like a false breakout in that you had high volume, you had it for one day, and it instantly closed back into the trading range. Basically, if you had a lot of volume that day, you probably should have seen this thing stay above that 135 level, 135.26 we saw on July 3rd. And, of course, we saw July 19th, 135.40. A little less volume on that. It pulled back in. One more attempt to break out. And, of course, not a real large candle, a hammer, and it's come right back into this trading range. So not all that much difference so far, but kind of interesting to see that biotechs, everything to me looks like we've had kind of a topping pattern out here. We've seen higher volumes at these highs, but pretty much pullbacks into the trading range. Another one, Cone and Steers Realty Majors, ICF. Been watching this for a while. $81.41 on July 17th. 300. 300. And we had about half that volume on August 1st. Got above it, closed back below it, but volume increased by double. A lot of these tried, and I'm not exactly sure if the volume came in late in the day as of yesterday, but a lot of these look like that they've come up, kind of decided that they were going to test. A lot more volume on the backside. Again, I'm going to have to probably look and give these a couple of days for them to come in. Part of that may have been some of the movement we saw from night trading, skewing a little bit of the data out here. The iShares U.S. Oil Equipment and Services Index has had a nice pattern off the bottom. Volume was, let me go back here and zoom in just a little bit better. Volume was a little light as it came back in and tested the June 4th low that was basically $43.94. Had almost 400,000 shares. Tried to get below it, and that was in the June 26th low. Volume decreased by about a third. So no big surprise that we had a bounce out of that. Started a nice ABC up, and we pretty much completed that move up here. Let me see if I can get into the expansions on that. See if it's which one it is down here. Let me go to 3 months here so we can pick up a few more. There it is right there. It pretty much got to the 1-to-1, which would have been $51.27. Got just a little bit above that. Got to the $52.06 high. But we continue to see that kind of movement back in here where it's completed its ABC up, it's pulled back. It's now going to probably in the next day or so look to see if it can't fill that gap. That gap came on a gap up on the 25th of July here, so we're just getting a little bit of pullback. What we didn't really have is a real sign of strength as you came back out here. So a lot of these ETFs are not giving us a lot to look at. The financial sector, IYF, has been in kind of a tight trading range here for a little while. Let me see if we can pull it out a little bit better here. And it's had a kind of a slightly higher highs and lower lows, but nothing really driving us to a good signal. But we certainly have one thing today, and that is it did pull back, and it has pulled back on heavy volume today. All things considering. Again, you haven't broken out, if you had put any trend lines on this, broken out, but this is probably the highest volume day that we go back to May 14th. So it does look like we're picking up a little bit on the financials here today on the pullback. Another one that's been kind of trading in a range is the financial services also. This one more in a trading range. But again, this is kind of the chop that we've seen in the rest of the marketplace. Probably the healthcare sector has had the lightest test of a high out here for the ETFs, the IYH. Again, not a lot of volume in these, but you had 120,000 shares on your July 18th high at $81.37. You went above it. You closed back above it, and we're pulling back again today. But 24,000 shares into that top. Not a lot of people buying that. Looks to me like a lot of short squeezes out here got into these ETFs, and we saw a lighter volume. Again, you can give me a call at 877-927-6648, and we'll continue to talk about ETFs here while we're waiting for calls and the market pulling back. I can see everybody's kind of focused like a laser out here. We're off about 14 now. I suspect if we don't have a lot of probably in the next 15-20 minutes have a lot of acceleration to take the edge off this move. I suspect we probably close down somewhere around probably around 1350 would probably be 1349 would probably be support in a blow-off sell-off at the end of the day. But volume is kind of lightening up as we go through this hour. Let's see if we have any other. IBM, IYR, just so many of these. That's one I wanted to look at, the IYR. We've been tracking this one for a while. It did try to take out a high. It did it on just slightly lighter volume. This has been one of the stronger sectors out here. I'd been looking for this thing to come back and get into this gap somewhere around 63, which we might get here in the next few weeks, and that may set up the real buy to get into housing if you want, or maybe to be short. Got a little doji coming out here today. But what we did see is the test of the high in the IYR. July 17th, $66.21, 21 cents, 7.5 million shares. Got above, almost above it, actually a dime short here. August 1st, $66.10, 6.1 million shares, so 1.4 million shares light. Pulled back in here, got a little doji. I really think from looking at the underlying stocks that the IYR wants to get back about in that $63 level and check. You did have some decent volume on that gap up day that started that gap, and that was about 7 million shares on that day. 10 million shares, excuse me, on that day, which was the 29th. Which started this whole upward move in the real estate. We've had a nice pullback, but volume was kind of strong, almost 7 million shares on the July 24th low, which makes me think we want to get back down in here and test this gap at least one more time in the IYR. Go through a few more of these real quick and see if we can't find anything that looks interesting. The telecommunications sector looks like it may have had kind of a blow-off top. in this market, or at least wants to come back in here to where the it actually had its blow up. What I'm looking at on it, IYZ, is the symbol on it, is the July 18th high, which you had pretty much 1.2 million shares into that high. We did go through it. You did end up having, am I right on that? Yeah, 1.2 million shares. We got it. There's that. 1.6 million shares as it went above that high on the 30th. But as we come back in here, we're coming right back to that high. You should see, 2 or 3 nice moves up if you consider that this was a real takeout of that previous high on a retest. If we close back below the 23.35, I'm suspecting that we're going to have a lot more or much heavier pullback in the telecommunications sector out there. NBY mid-caps. Let's see if anything else is really giving us a nice little test of what we wanted. Not a good thing in that. Pharmaceutical holders, power shares. So much of these things are just chop and low volume that it's hard to get something really good to look at out here. SMHs are the other one that kind of interested me out here. We had a kind of a nice trading range set up, and it looks to me like we're probably going to get back into the gap up that we had just a few days ago on the Semiconductor Holders Trust, SMH also. Around $31 level. We'd have to see how things worked out, but we had a previous high out here, which it quite couldn't get to, which was the July 29th high, $32.79, 3.2 million shares. And we got into it with about 2.7 million shares and a pullback. This nice gap up had some decent volume in it at almost 3 million shares at the $31 level, and that was on the 26th. But my guess is we're coming back in. Saw a lot of these almost false breakouts in the markets. You've got a continuing pattern, which is kind of a ratcheted up high after high. Today we are pulling back on the SPYs. Volume's not all that extensive just yet. We did have a lot of volume as we got to the previous high. Again, that was on the comments from our wonderful Super Mario Brothers groggy last week. Caught a lot of shorts on the wrong side, had a lot of volume. As we went above it, that volume did not come in even the next 2 or 3 days. Normally you want to see volume and a sign of strength within 3 days, or like today you get a decent pullback. I suspect we get down to 134 here in the next couple of days very quickly.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Request to look at Apple again. You know, if you look at the chart, I don't think you can be wildly bullish or bearish on the stock. What you have is a high, and that high came at 619 on the July 10th. Had 18 million shares. Tried to get into it yesterday. Reversed on 13 million shares. Not a lot of buyers up here. I suspect there's probably a sell program also up here on the top. People trying to get through. You've got, I think it's the 12th or the 14th, a major announcement. They're going to show the iPhone 5. I've seen a lot of leaked pictures. If what they are showing is really the iPhone 5, they better have a lot of new software to drive this, or a better version of Siri, or some other thing up their sleeve, because it's not all that impressive so far with the hardware that's come out from Samsung for the Android. They've been able to probably get 95, 98% as good as Apple, and you know, they continue to get better and better. It's hard for me to see Apple blowing up, and because it's a cult stock, as soon as it gets down to 550, everybody will believe that it's time to pile in. But I suspect this thing's kind of in a wider trading range, and it may be in a wider trading range like Google has seen for years. They're going to need the next really big product to double or triple or quadruple their sales. And right now, with the iPhone being a 2-for-1 for every one of the tablets for the money it's bringing in, the tablet is not going to be able to handle the people that actually are just going to put new batteries in their iPhones as they continue getting into version 5. Again, you know, the phone business is now turned into evolutionary businesses instead of revolutionary businesses. Historically, Apple has done poorly when it now goes from revolutionary to evolutionary. And they're kind of in that cycle now where it is just a little bit better each time. Microsoft has always, in the past, been able to win that, I think it's called Kaijing, where it's the Japanese principle of just being 1% better every single day. Eventually you will catch up to companies like Apple. And I think Google's kind of been in that role. Do they have other things coming out? Apple TV, a lot of that stuff, yeah, but it's going to probably be next year. Their tablet, yeah, it's going to come out, but they need yet another revolutionary product, and nothing's leaked so far that would say that it comes out. I still suspect this is in some kind of bigger trading range. We could see, when the iPhone 5 comes out and the mass hysteria comes back out, this thing could probably get back up to 640, and we might see, if the market really falls apart, down to 533. I would probably, if I was playing this and going long, and I won't be, but if you could buy this down around 533, I think that would be the buy. I can't really see being short because you're at the mercy of their press engine. All they have to do is come out and say that they're coming out with something revolutionary, and this thing's going to probably stop you out. I just think there's better stocks to play out there in the marketplace and looking at that. I'm going to look at the Qs here before the end of the day. Again, a lot of seesaw zigzag motion. We've tried one more time to break out of the top. The last time we got up here at $65.31 on June 9th, we had 53 million shares. Getting into that with 42 million shares just a few days ago, and 30 million shares yesterday. Not a whole lot of interest to buy at any higher price here. This really continues to look that these gaps up were nothing more than a short covering rally, and I think you can tip your hat to Groggy and his partners for running the shorts out, probably to help get maybe some of his buddies out of the market. I suspect we are going lower. I'm looking for a drop back into that 1265, 1285 range now. But we shall see. We'll know in the next couple of days. Fun buying is over. See you.